Hey everybody, what's going on? John here, Johnny Investor Howard. Did you know that today, Friday, December 18th, is the last trading day to get into Tesla before Monday, December 21st, which is when it officially goes into the S&P 500. At that time, there's going to be tons and tons of ETFs that have to pick up those Tesla shares. Well, it is. So what I'm doing is a quick video today. I found a great clip actually of Jim Cramer talking about Tesla and what he believes. Something that actually, when I watched it, I didn't really think about too much until I saw it. But what he's saying is all of the buying that's going to occur in Tesla is going to be basically what's going to happen is people are going to have to sell some positions in the larger companies. So what that does, in his view, is it opens up a lot of opportunities to buy into some of these bigger companies. In his clip, he actually really likes Apple for this particular opportunity. So we're going to go ahead and go into this clip and watch what he has to say. And then what I'm going to do is I'm going to talk to you about my positions. I do own Tesla. I am not let's say, a raging Tesla bull. I do have about 4.5 to 5% exposure to Tesla, and I'm going to increase that. I thought about going up to 10%, but I just can't double it. I'm going to go ahead and I'm going to go up to about 8.5% exposure in my IRA and SEP, and then in my corp account, and that's what I'm going to do. And then what I'm going to do is I'm going to talk to you about what I'm going to sell in those accounts to actually pave the way to getting that Tesla shares. And then after that, we're going to talk about the big company opportunities that are going to be opening up because of all this Tesla activity, and how Tesla stacks up against some of these bigger companies with respect to their market cap, their revenues, and their gross profits. Okay, so let's go ahead and hop in.
Good morning and welcome to The Street Live. It's Friday, December 18th. I'm Catherine Ross, and I am joined, as always, by Jim Cramer. Jim, this is our final episode of 2020. So what are you going to be watching in the markets as we await the FDA's decision on Moderna's EUA?
All right, well, I'm watching that. I think pressure that's being created by the addition of Tesla into the S&P and the rebalancing. The bigger companies are all selling off, and I think that's money that's going to end up going to Tesla. So the artificial nature of the sell-off cannot be avoided. I'm particularly looking at Apple.
Real quick, so when he says the artificial nature of the sell-off, what he's talking about, in case you're not really clear, is, in his view, the artificial nature of these big companies that are going to sell off so as to kind of go into the Tesla shares.
We had two really incredible notes that were very, very positive, and it just didn't matter. And that's because I think that Apple is under liquidation to put money into Tesla. Might be an opportunity for people to buy Apple.
Jim, during No Huddle last night on Mad Money, you pointed out that the 1918 pandemic actually led right into the roaring 20s. For investors looking to start reallocating their positions to make a play based on the post-vaccine boom, where do you want them to start?
Well, I think that you have to just take a hard look at travel, leisure, hotels. I mean, look, I've been looking at Airbnb just for Action Alert. It's kind of interesting.
I actually just did a video on Airbnb. Actually, I did it a couple of days ago, and it is live. So I'm going to go ahead and put a little information tab here so you can go and click that video. It's pretty heavily, people are really looking at it. But basically, I'm not going to go into these other fields that he talks about. Jim talks about Boeing. He talks about Nike. I actually do have positions in Nike, and I really like Nike, but the spirit of what I'm doing is I'm really going after growth tech. I know growth technology, and that's what I'm going after. So basically what I want to do is I want to hop into another screen that I have, which is we're going to stack up some of these big company opportunities. So real quick, what I'm going to do is I'm going to go up to 8.5% exposure to Tesla in my IRA. Okay, and in doing that, what's going to happen is I'm going to sell. All I really have to do is I'm going to sell some Amazon, and the thing with Amazon with respect to my IRA is I've got like a 600% gain or something like that, and I've been meaning to kind of shed some of my position in Amazon, and this is the perfect opportunity to do so. My concern with Amazon in my other corp account is that because it's not an IRA, you have those tax consequences, and with large gains, you have, some pretty serious tax consequences. So most likely I will not sell Amazon in my corp account because of tax consequences, and I will sell basically VU, which is the Vanguard S&P 500 index fund, and then VUG, which is the growth aspect. It's actually done very well for me, but it's index fund, which is the growth aspect of the S&P 500 index fund at Vanguard. And what I'm going to do is I'm going to do 2/3 of VUG and then 1/3 of VU. And I like that too, because with respect to VU and VUG and the index funds, and even ARC, I'm starting to kind of, basically take more positions in ARC. But basically, it's really easy to go in and out of. You can always go back into VU, and you can always, get out of it. I always want to keep my exposure and try to keep their percentages good and solid. But at the same time, when I feel strongly about a position, whether it's going into it or exiting it, it's really I feel it's very convenient to, sell and buy into VU and VUG. So basically, what we're going to do is take a look at some of these financials and how Tesla stacks up against some of these bigger companies, because it really does open up an opportunity to take some positions in some of these bigger companies after all these ETFs start to really buy up Tesla. So if we take a look real quick, what I've done in my financials here, I'm going to go ahead and minimize my screen. This is basically what I do is I take a look at the most recently reported full year financials, okay? And then I analyze that against the market capitalization. And Tesla's a little hard to keep up with respect to their market cap, because their stock is just going crazy. So if I do an analysis report like I did when they released their earnings back in, I think it was early November, or maybe even late October, their stock price changes so much in a matter of weeks that it's almost obsolete. But basically, as of today, Friday, December 18th, Tesla's market cap is 637 billion, almost 638 billion, which is really big. And basically what it does is I want to highlight a few of the companies in terms of the big companies, which are Amazon, Microsoft, Tesla, Facebook, and then even Google, right? I'm certainly not going to be increasing my exposure to Amazon. I've got almost too much Amazon. I got to figure out how to shed some of those positions. But just to kind of so you're clear, I mean, the total revenue, the total annual most recently reported again. A couple months ago, back in November, Tesla wasn't reporting full year financials. So the most recently reported full year financials that I have available for Tesla are 24.578 billion in revenues. And if you actually take a look at their gross profit, their margin's pretty not that great at 16.56. So if you actually kind of tear into some of that analysis, we have the full year revenue financials of Amazon at 280 billion. So if you actually do that math, it's like, wow, the full year financials most recently reported again of Amazon is over 10 times that of Tesla. Now, Amazon doesn't really have gross profits that are as high as, say, some of the software companies, or let's say Facebook, Microsoft, and Google or Alphabet. But it's still pretty high. Like if you take a look at let's take a look at, for example, the next highest one. I mean, I'm not going to really cover Apple because, again, I'm not really going to be going into more Apple. But Microsoft at 143 annual, basically billion, which is their annual, most recently reported annual revenues. They've got a pretty high, very high gross profit margin at 67.78. So their gross profit on an annual basis, most recently reported 12 months, is almost 100 billion. So if you actually do that math, Tesla's only 4 billion. That's like literally 25. Is that right? 25 times the size is Microsoft. So if you take, that's what this breakdown really is. So if you've seen some of my other videos, maybe you have, maybe you haven't, but I really take that annual gross profit number and then divide it into the market cap and come up with a ratio. And that's how I kind of have to at least try to understand some relative valuations. And what's kind of funny is if you take a look at Tesla, their $4 billion gross profits, I found this pretty funny, but eBay's got a higher gross profit number on a most recently reported 12 months at 6.9, so almost 7 billion, so almost twice what the gross profit of Tesla is. I find that pretty funny. I don't know. And then Netflix is 7.7 billion, most recently reported annual gross profits, with a much higher gross profit margin number at Netflix at 38.28. So they're more than double the gross profit percentage number that Tesla has. So that's just a little bit of context for y'all. I think that another big one, two big opportunities I see are Facebook and Google. Google's come up a little bit since they reported their earnings in the end of October, early November, but basically they're still from a relative valuation. Facebook and Google are looking pretty attractive once everything happens here with Tesla. And another thing to think about with Tesla, if their market cap right now is about 640 billion, if you multiply that times two, that's basically right there. That's almost 1.4 trillion. It's almost 1.5 trillion. That's about the size of Amazon. So it's kind of funny to think that Amazon's got 10 times the revenue, but then they might be the same size company as Tesla if in the event that Tesla doubles. So that's just a little bit of perspective for you. For me, I am going to be increasing my exposure to Tesla because my simple philosophy is Tesla going to, in my view, is it more likely than not that Tesla's going to be a successful company, during and after, the S&P 500 inclusion? And my answer is yes. And then do I want to or do I not want to be a part of that ride of Tesla being a successful company, during and after the S&P 500 inclusion? And the answer is yes. How much higher can Tesla go? I don't really know. I don't know. Maybe it'll become the biggest company in the world soon. I don't really know. We don't really know at all. But I think that if Tesla does double from here and it's, hypothetically, potentially the same size company as Amazon, that's not a very attractive relative valuation. And I don't really, my understanding at least is no company in the history of the world has ever been able to achieve that valuation. In fact, I've got another video that I did where there's a professor, pretty famous professor that actually talks about Tesla and their relative valuation, and that no company in the history of the world has achieved the relative valuation that they have. So hopefully you find that enjoyable. Again, I'm going to be doing a little bit of sales, and I'm going to purchase Tesla today before the market closes. Again, today's Friday, December 18th, and the market's going to close here in California in a little bit less than 2 hours. And I'm going to go ahead and do those sales, and I'm going up to 8.5% exposure in my IRA and 8.5% exposure in my corp, and then 8.5% exposure in my other corp account, in the 3 brokerage accounts that I operate in. Okay, have a great day, and let me know if you're going to get into Tesla and what your percentage exposure is on Tesla, or if you're doing options. Okay, thanks a lot. Have a great one.